I'm coming in hot.
Hey traders, welcome back. Thank you for joining me today. I've got another one in store for you. Today's video is going to be on the Dow Jones and the futures market. It is the December 20th contract. I have a good feeling that the Dow Jones, along with other big future indexes, are going to be pushing to the upside based on where they fell a couple weeks ago. I think because why my indication or what my analysis is telling me for why I think we're going to retest that high that we had recently is because of the current election and the market conditions that we have. I think that the market's going to want to retest itself. It's what it usually likes to do. It usually likes to revert back to where it was and retry those highs or those lows again. But right now, I think we're going to get a good push to the upside. I think whatever happens based on this election period that we're about to go into in November, we're going to see a lot of big movement. And I think because of that, you're going to see good pushes to the upside. But whoever gets elected is going to determine which direction the market's going to go. That's just the fact. It's just going to move in a certain direction based off of who's getting elected here or who's getting elected there. So I'm not picking sides. It's not this kind of video, but we're going to get into an idea of why I think the market's going to go up right now. And until the election comes, we'll find out what's going to happen. All right, guys, so let's get into the video and let's see what's... All right, traders, let's do it. Welcome into the video. Okay, guys, so let's take a look at what I'm seeing on the screen here. Right now, I got the YM pulled up for its top left corner. It's a 60-minute chart. I want to show you guys why I think the YM is getting ready to push to the upside. As we can see, if I zoom this out, we had a really big push. That's all through the big massive rise, the big uptrend that we had that was pushing up until it recently fell right around here in September 2nd, around that time, September 3rd. I think that the market is coming down to here and it's basing out right around here. And it could still pull back maybe a little bit to the downside, but I got a feeling that the market's about to push high. I think it's really about to start getting high again, start going. The NASDAQ is starting to push out again. The Russell 2000 is starting to go again. I really think that the market's getting ready to really do its thing, and I want to show you how I'm going to take my opportunities on this market based off my hedge fund levels and the signals that they're presenting to me. So in this case, with my hedge fund levels, if you're not familiar with them, they are a forward-moving indicator. So basically, they are built around or designed to read for volume and liquidity that's being entered into the market in large quantities. So basically, that's why they're called hedge fund levels, because they're built around where the big hedge fund levels are coming in at to trade the market and move the market. So that's the value of what they do. That's kind of the idea of how they work, and the value of being able to see when the hedge fund levels are coming in, so you can trade with the big hedge funds and institutions in the market. So currently, if you look on the screen, we have red arrows and green arrows. These green arrows represent big buying institutions that are coming in, and these red arrows represent big selling institutions that are coming in, when people are coming in to sell versus buying. So you can think of the red arrows on the tops as a resistance level. You can think of the bottom of the green arrows as a support level. So that's kind of what they represent. Think of them like that. They're built around support and resistance as well, around key historical data where the big institutions are coming in at from that level, and they're firing in the trade to push the market back and forth in each direction. So what I like to look for when it comes to going for a long position, this is why I think the market's getting ready to roar long again, because these levels, I have a bar look back on the screen. I think if you've watched my previous videos, I've discussed the bar look back. I'm going to go over it again right now. You go to indicators and you go to bar look back. The bar look back represents the amount of arrows that you have on the screen. In my previous videos, if you watch them, you can see the bar look back. I'm usually using a much lower bar look back, around the 20s or the 13s or 15s, somewhere around there. For this particular example, for the YM, I'm using a very high bar look back of 45. The higher the number, the stronger the arrow is on the screen based off of where that hedge fund level is printing, because it's condensing the liquidity. So if I go, it's condensing basically the volume for that arrow, for why it's being presented on the screen for us. So if I go lower on the bar look back, you're going to see a lot of hedge fund levels, a lot of arrows on the screen. It's going to congest the screen and make it really choppy and nasty looking. So that's why I chose the 45. And as we can see on our screen, we still have a fairly good amount of arrows that are presenting themselves on the screen for strong key levels. And this is why I think the hedge fund levels are telling us something, that right now, as strong as it is, the market is extremely strong in terms of what it's doing. It's holding very strong right now, I think, and I think we're going to see a rise to the upside. So I'm looking for 3 falling reds to go long and 3 rising greens to go short. So here in this case, I've got falling red, falling red, falling red, and you're probably looking at this one. What about this one? Yeah, that counts too. So in this case, we have 4, but generally I'm looking for 3. Okay, so we would do is right here, we would just basically, what we would do here is we would just draw our lines out. We're looking for where the arrow line cuts the line at the most recent one before it, and that's your line, guys. You're just kind of looking for these three. If you have three consecutive falling, you're just looking for a setup for an opportunity to cut the line. So this is the trend line that you're waiting for break, and that was your push to the upside. But I think this is a good swing. I think it could come back a little bit, but I think it's not going to come back much. I still think the market's going to break out and start going up as the November election approaches itself. So let's pay attention to that more. Let's keep that in mind, because the market, as we know, is a very manipulated place. I believe that. I think there's a lot of things that go on in the market, but I really think that the market's going to push harder to the upside. So as you can see, we had a good shorting opportunity here with the hedge fund levels. You're looking for rising greens, rising green, rising green, boom. You could have even taken this one higher if you wanted to. As a more aggressive stance, you could have went here. So this is really where you could have gone with that one, taking this from much better positioning right here, but you would have got chopped around a bit right here. You would have had a clear opportunity to the downside, just clear, clean, quick. But yeah, good moves all around. Let's look at some more examples right here. We've got a nice little rise to the upside right there. It cuts. That's where the break is to go out to the upside. Good little swing play over the course of 3 days. Let's line some more. Yeah, my hedge fund levels are strong, guys. They give us good, clear plays all the time, and that's what I like about them. They're strong. So here we go. Let's look at this one. This is a good one. Rising green, rising green, rising green. Let's draw that one out. There's your drop. There's a nice quick play to the downside, just like that. These are big moves. Like these moves right here are like $1,000 play moves each one. 2,000 play moves. We're looking at like 400 points here at times. These are like $8,000 moves. When I talk, it's much more than that. But if you're just grabbing a piece of that, these hedge fund levels are key, guys. They are telling you when to enter the market. Big time moves, guys. Big time moves. This one right here, falling red, falling red, falling red, falling red, falling red. Draw that out. There's your break to the upside. Boom, just like that. That's your rise. Same thing. Let's swing this back some more. If I move this back, let's take a look at that. Falling red, falling red, falling red. Draw that out. There's your break to the upside. My hedge fund levels aren't, lying to you guys. They're showing you a clear indication of where to look for an entry. The best thing about my hedge fund levels compared to other indicators, and this is something that can't be denied, people can't sit here and look and say I'm cherry picking anything, because what I'm doing is that the analysis for what I'm looking at has significance, because all you're waiting for on the screen is to draw that line out, and you're waiting to see, does price ever break to the upside or break to the downside. And as you can see, my hedge fund levels are telling you where to do it if you look at the screen. So that's all you got to do. You're just drawing your lines out and you're waiting to see which way price decides to go based off where the line is at. So if you guys are curious and want to know more about the hedge fund levels, I'm happy to set you guys up with a one-on-one free demo. Let me know what you guys are thinking. Give me some comments in the comments section, or send me an email. I'm happy to set you guys up with it. I'm happy to go over it with you on the phone. Send me some questions or whatever you guys want to know. All right, guys. So let me know what you guys want to do. Remember to like and subscribe. All right, and happy trading.